In today's video, we're going to discuss the 1% rate hike that the Bank of Canada has just announced. This is July 13th of 2022. Some of the impacts on your monthly mortgage payment if you have a variable rate mortgage, and how I expect this to play out in the overall real estate market. All right, let's dive right in. So the Bank of Canada increases the policy interest rate by 100 basis points, which is the same as 1%. And they say here they've increased it now to a amount of 2.5%. So the bank prime rate is actually different. So the Bank of Canada overnight rate is different from the bank prime rate. However, they are closely connected. So now the Bank of Canada overnight rate is 2.5%. What they are saying is that inflation is higher and more persistent than they expected. It will likely remain around 8% for the next few months. They do acknowledge that global factors are affecting inflation. So it's not just created in Canada. Obviously, the war in Ukraine, how that affects oil prices and supply chains, especially even in China right now, how some of the lockdowns are affecting supply chains are affecting inflation significantly. They even mention that the CPI, the Consumer Price Index, more than half of its components are rising by more than 5%, which is interesting to see. So it's not just in one area of price increases. And they do also mention that the Canadian economy has some excess demand. So the labor market is very tight, record low employment, and then they expect the economy to grow. And those are pretty much my main takeaways from the Bank of Canada announcement. All right, so let's look at a little bit of the history of the bank prime rate. So the bank prime rate is different from the Bank of Canada overnight rate. The bank prime rate is what the commercial banks, so your TD, RBC, CIBC, BMO, Scotiabank, National Bank, right? What they use for their variable rate lending products. And as you can see right now, it still hasn't been updated yet. It is at 3.7%. With this 1% rate hike, it's going to go up likely to 4.7%. So you can see here historically, the orange bar is the prime rate, and then the blue bar is the Bank of Canada overnight rate. The overnight rate is always less than the bank prime rate. That's how I assume they make a profit, by charging more than what the overnight rate is. But you can see it moves pretty much in lockstep. There are very few times when it doesn't. So that's why we can assume that the prime rate is going to be going up today following this interest rate hike announcement. You can see in the past, in the 40s, 50s, 60s, it was at a rate maybe similar to what we are going to be experiencing shortly here. The prime rate was the Bank of Canada was at 2%. So actually it was a little bit less than now what we're going to. Now we're going up to a 2.5 overnight rate. So actually exactly what it was in the 40s and 50s. The curious part about all of this is during the period from the 60s through the 80s, while the prime rate was increasing and interest rates were increasing, just as a real estate investor, real estate prices also increased. It was only when the interest rates went bananas to like 20% did the market really suffer. So it will be interesting to see. I don't think the Bank of Canada can or even wants to raise it as high as they did in the past. I was listening to Benjamin Toll, the deputy chief economist at CIBC, and he was mentioning that around this amount, between 2.5% to 3% for the overnight rate, was what they call the neutral rate, which is what they believe is the highest they can raise it before some negative repercussions start coming into place. So they were urging the Bank of Canada not to go beyond that. So we've now seen this rate hike. So it'll be curious to see what's next to come. So let's open up a little profit calculator here. So this is a product that we are working on not really a product, it's a free calculator that we'll be sharing next week's, but I'm going to just use it here to showcase an example. So if you have a $500,000 variable rate mortgage, now, well, we'll have to see after this rate hike, but up until recently, it was pretty easy to get a variable mortgage at the bank, the prime rate minus 0.5%. So up until recently, the prime rate was 3.7%, less 0.5% is about what it shows here, BMO 3.2%. That was a very common interest rate we could get. At 3.2%, our mortgage payment roughly is $21.62 a month. Of that $21.62 a month, about $900 is paying down the mortgage. The rest is going to interest. When we adjust it now to 4.2, which is what it is likely going to be after this rate increase, you can see that the payment has gone up by about $283 to $24.45 a month. So it's roughly just north of a 10 to 15% increase in terms of the monthly payment. The curious part about this, as interest rates rise, less of your mortgage payment also goes towards paying down the loan. So previously it was $900, now it's $775. So it's $125 less of that mortgage payment is going towards the loan. So the total difference, which is the additional interest cost, is actually $408 a month. You don't pay $408 extra on a monthly basis, but that is truly the effect of this interest rate hike. So let's now talk about what we can expect in the next little bit here. So real estate prices are likely going to continue to go down. We've already seen in the last few months anywhere from 15 to 20% in terms of prices declining since February, which was somewhat the peak of the real estate market. So prices are down. I'm expecting them to go down further, given that the cost of borrowing is going up. Therefore, buyers in this market are likely going to look for a good deal, negotiate, and if you're a seller that needs to sell, say you've already bought your next place or you're retiring or you need the money for some reason, that is going to have a downward pressure on real estate prices. How much further it goes, only time will tell, but I am expecting in the short term for prices not to be going up. Rental prices, I believe, are going to go up. It's hard to know exactly when. Again, with any forecast, my guess is it's going to take a little bit more time for the rental market to truly adjust. I know already in Toronto, some areas of the GTA rents are already up, but across the board, I do think some of these changes take a little bit of time for it to ripple out through the market. So even though now immediately the cost of a landlord's mortgage payment is going up and potentially less buyers are going to buy because it's more expensive to buy, and maybe they were on the edge before, now maybe they can't qualify, there are likely going to be more renters, which will drive up the rental market, but I think that effect is going to take some time to play out. In terms of listings, I think we're not necessarily going to see a whole flood of more listings, more than what we have already. So already there's quite a lot of listings on the market right now since February. I feel like many of those people may have been waiting, trying to see when the market is going to peak to try to catch that, or maybe their circumstances changed. But anyways, all of a sudden we had a whole bunch of listings. I don't think that's necessarily going to change unless what the Bank of Canada doesn't want takes place, which is that the rate hikes cause us to go into a recession. The reason a recession impacts the real estate market is if people start losing their jobs. People, if you're employed, you can cut back in other areas to handle a 15% increase in your mortgage payment. So what we saw here was roughly around a 15% increase in the monthly payment. Most people can afford that. You eat out a little bit less, you cut back in other areas, right? You take less vacations. If you are a two-income household and one of you loses your job, all of a sudden you can't afford your mortgage payment. It's not because the mortgage payment went up 10, 15%. If the mortgage payment doubles, maybe we get there, but we will likely see more listings if we go into a recession. That can maybe cause a drastic effect in terms of real estate prices. In terms of the number of sales that are going to happen, I think it's likely going to go lower as people switch from a more exuberant mindset, expecting prices to go up further, now to maybe a more fearful mindset of they don't know what's going to happen next, so they're going to hold back. So both investors, home buyers, I think that's going to be the case. So we're likely going to see less sales take place. I do think over the midterm, so over the next 2 to 5 years, we are likely going to see real estate prices increase. And the reason I say that is because of this prime rate history. When we look back at the history from the 60s all the way to the 80s, we had increasing interest rates, but we also had increasing real estate prices. The reason for this is that people saw real estate as a way to protect themselves against further inflation, because real estate is a hard asset. If in an area with demand, people expect that real estate prices will rise and rents will rise. So like I mentioned, it may take a while for rents to come up. From that point forward, I can see real estate prices rising, but it may take some time. So we may go further down before we see prices rise. So again, all of these are things to consider with this new interest rate hike. Personally, as an investor, I'm holding on to the properties that I have. I'm going to pay the extra interest on my mortgages, but I am fairly confident in the long-term outlook of real estate. And in the short term, there will be uncertainty. These may be the times to really assess your personal finances if now is the right time to buy for you. I'm not recommending anyone to just rush out and buy. We're not yet seeing, at least as of right now, we're not seeing incredible deals show up yet. Maybe after this new interest rate hike, we may start to see a bit more in terms of the amount of cash flow we can get from properties if people aren't expecting prices to rise further. We'll definitely keep you updated if we see more of that. But yeah, that's it for this update. Hope you found it helpful. If you have any questions, feel free to comment below. Until next time, all the best.